Good morning, everyone. We have got a market that's had a struggle the last couple days in terms of a weak bounce, and we've seen that in a few of the names, although we've also pointed out that the Wyckoff undercut and rally type formation has also been prevalent, and that, of course, is a great low-risk buy opportunity. So when you have weakness in the market and you have leading stocks that undercut prior significant lows and then start to bounce back above that critical low, then that can offer a low-risk entry point that's typically only a few percent or less. And that kind of formation, together with the volume dry-up formation, which we call voodoo, are more or less your best low-risk buy points, because your risk is typically contained to 3% or less. And we pointed that out in the focus list updates. As far as the weakness of the bounce seen in the major indices, obviously the market was tentative, and in terms of the healthcare bill, the concerns about it won't pass. But I think reality might be seeping into the marketplace today, especially in light of Trump's administration. Trump saying that if they don't pass the healthcare bill, we're going to move on to more important things. And the people who, as far as his tax reforms go, the people who might vote against the healthcare reform bill, there's no correlation between voting against that and voting against a tax reform bill. It's a totally different situation. So, and that's probably a much more important piece of legislation anyway. So I think that we're seeing the signs right now. I think the volume was higher on the NASDAQ, so whatever happens over the weekend, whatever the outcome of the healthcare bill, maybe we get a knee-jerk mini gap lower if it doesn't pass, and that could very well be an excellent buy opportunity. But you'll see it in your stocks. Watch your stocks, and they'll tell you what you need to do. Now, as far as I'm just looking here 1 second. Yeah, now as far as leading stocks are concerned, we saw a number of these high volume outside reversals, like on Amazon and Facebook, and of course that's typically a bearish pattern, but in context with the reasoning behind what drove the reversal in leading stocks and in the major averages, you got to keep that in context. In other words, on a technical basis, yeah, it's a big negative, which would normally point to lower lows, but in the context of why that happened, you got to just remain in the now, and you got to focus on your stocks now, and they'll tell you what you need to do. There were some good long plays over the last couple of days. We mentioned, a couple of these stocks, like JD was a good one where it undercut the 29.96 low from a couple weeks back. And now it's continues to trade higher 3 days in a row. So that's a nice pop to the upside. There's a few others we'll talk about during this broadcast as well that have had similar favorable entry points. And as far as the Trump rally is concerned, I think the bigger, what you might ask, what would cause the markets to unravel? Well, I mean, there is that concern that he might not get certain key pieces of legislation through, and I think the biggest one is the tax reform bill. And so I think that's going to cause some volatility and nervousness ahead of that piece of legislation being voted upon. So, but again, just as we always say, watch your stocks, because we don't trade on news. Market can go either way on news depending on perception, but what's more important in terms of your profits are how your stocks perform. So with that, Gil and I can go into the part about Stock Top from here.
Okay. Yeah, the market, from an index perspective, you had the big break on Tuesday, and then you undercut the lows on all the indexes. You undercut the February and March lows, and now you've staged a logical reaction rally to the upside. You can see that the NASDAQ's up to the 10-day line. Yesterday, although I don't show the 20-day exponential moving average here on this chart, yesterday they did run into resistance at their 20-day exponential moving averages across the board. So, you know, that on a technical basis, the action yesterday looked weak, but it's all sort of running around on news, and I think the surprise may be that they don't pass anything and the market rallies because it doesn't completely take healthcare legislation off the table. So we can go through our focus list, and as Chris was pointing out, you saw a number of these big volume outside reversal days take place on Tuesday. You can see that in Amazon here. And that looks pretty ugly. I mean, that looks like a shortable move, but notice how it undercuts a low here. From this low here would be from March 6th, and it turns and rallies. So what I'm doing actually on Wednesday, when everybody's in panic mode, I went short the day before when the market reversed, and as we undercut, I saw the undercut on the indexes, which also coincided with these undercuts in a number of individual stocks. Now, when I see all that happening together, to me, that's a short-term cover point. And yeah, things may bounce and roll over again, but I'll let them tell me what to do on the 620 chart. So it's very interesting that I could see all this occurring on Wednesday morning, and so that was, in my view, a time to look at taking some longs, at least for the purpose of swing trades. So if we look at that, another one, you know, the other situation would have been you get an ugly reversal here in BABA on 4 days ago. So let's see, I got this new pen called Epic Pen, which is a much better annotation tool than I think what they have on PowerPoint. But in any case, you can see here that here's a big outside reversal, but it stops right at the 20-day exponential moving average. So that's, in my view, you know, BABA has these nice moves to the upside, but it always comes back into the 20-day line. It's been doing that for the last 5-6 weeks. And so anytime it pulls in, you got to look at it as being potentially buyable, okay, rather than thinking it's going to blow apart and you got to run away. I think what you can do is take a shot at the line, and the bottom line is the closer to the line, I guess that's a pun, I don't know, the closer to the line you could buy it, the tighter your risk is, because then you're using the 20-day exponential moving average as a selling guide, okay? So, you know, that's when you have to take your shots in this market. Like, getting all excited and chasing strength is a fool's game. And I think for the most part, when you start chasing strength, you're just setting yourself up to possibly get shaken out. Because what happened the other day, let's say, for example, if you chase the breakout on Monday in BABA and it's a base breakout or it's an ascending base breakout, you could talk yourself into that one too, I suppose. And you get excited, you want to buy the strength. Well, you'd be getting hacked a good 4% or so off the peak, and the market's looking really scary, and you're probably going to get shaken out of your position. So if you're buying near the 20-day exponential moving average, your odds of success are better simply because of the way this market tends to operate. And also you can control your risk very tightly by using the moving average. So I don't get bogged down necessarily in what the indexes are doing. I think what's happening right now is probably news related, whether it's alibi selling. In other words, they use the news to sell, and then when the news turns out to be not so bad, they rally it, but then they come back and sell again. So it's a distributed process, but that's not really clear to me right now. That's the old alibi selling that Bill O'Neill used to tell me about. That's how institutions would operate. So in other words, you see this is an alibi sell 4 days ago. It's based on news that healthcare legislation is not going to pass, and this is going to kill the whole Trump agenda, which I don't necessarily agree with. If you got a few Republicans who are conservatives and don't think that the healthcare legislation does enough to get rid of Obamacare, and they don't want to vote for it, they want something better than that, then I don't see how that impacts tax legislation, because those same conservative Republicans who are against this sort of what people are calling Obamacare light that Congress currently wants, or the government currently wants to pass, I don't see how they're not going to want to vote for tax legislation. So, I think it's kind of noise, so you really want to watch and see what happens in terms of the precise price volume action. Anyways, but you can see if you...
Yeah, I wanted to just mention real quick, in terms of alibis, September 9th of last year was one of the biggest ones, where they used the Fed governor's hawkish stance to completely throttle the markets. That was very artificial action from the September 9th for the next few days, and you just wonder, okay, well, they're using this type of news event as the alibi. So what are they trying to accomplish? If that's the case, and maybe maybe the perception really is that this QE phenomenon, it can't end well, and maybe there's some people out there who are trying to dump a lot of their holdings, into a very exaggerated long-term market top. But the Trump obviously is a bit of the wild card. So things change with the markets, and right now, if that was an alibi that happened 4 days ago, the only thing that I'm thinking that's the real concern on the table right now is the QE effect, because as we've written a number of times, this sort of thing does not end well, but it can take a lot of time for it to end, and markets meanwhile can continue to march higher.
Yeah, so I think, be willing to take your shots, because one day of selling does not necessarily end a market. So it's a process. So you have to look at pullbacks initially, particularly in names that are still technically intact. You have to look at them as potentially viable, and that's kind of what I do. And I try not to pay too much attention to the indexes unless, one of the things, for example, on the short side, if I see the index undercutting a prior low, like the NASDAQ and the S&P were doing a few days ago. You can see this is undercutting lows here, and this is undercutting lows here. So at the same time, again, we saw stocks like Amazon undercutting a prior low, JD undercutting a prior low, Square undercutting the intraday low of the Bible gap up day over here. So, when that happens, it's a little tricky, but notice how it gets back above, and then you get the rally, but it's sort of running into the resistance at the 10-day line. We'll see if it can get through. But in a sense, this also sets up the possibility for a pocket pivot coming up to the 10-day line if the market turns. So I think you have to be aware of that as well. So it's a fluid situation, but I think if you try to interpret things in terms of what the stocks themselves are doing and operate on that basis, I think you'll mostly stay out of trouble. You might take a couple the losses 1, 2, 3% depending on how tight you're running things, but I think it's a practical way to operate in this market. The other thing here, at least from my perspective, is that I'm quite willing to work the market on both sides. So I'll have some shorts and longs. So if the market does sell off, I've got my shorts helping out, and if I have a strong long, like some of these, I think Snap looks pretty good. That's on our list right now, and that was an undercut and rally, and you can see how, I was hearing some IBD types talking about how, the Snap is a buy point at 29.44, and I'm thinking, are you kidding me? But we can see here, for those of you who attended the mini conference this past weekend, which was a great success and a heck of a lot of fun. I hope everybody who was there had a great time. I know I did. And I actually can remember it because I made a point of not drinking very much. I only had 7 martinis, I think. But in any case, and 1 glass of wine. So in any
Beautiful.
case, what's that?
It's just beautiful wine, especially with Robert and his part of his collection.
Yeah. Oh, yeah. And I want to thank Rob for showing up. I don't know if he's on here right now, but he brought some 4 bottles of really nice wine to add. But we went through, it was pretty funny because the waiters came running up to me about 5 minutes before dinner. They had already started to serve wine, and we had allotted several $100s for wine initially for the event, and they were in a panic because we had gone through all the wine even before dinner started. So that's what happens when you get a room full of traders together. They can suck up wine like nobody's business, which they did. In any case, we just ordered more wine. It wasn't that big of a deal, but so. In any case, let's look at Snap here. But like we were talking about this sort of setup, being more resourceful and using these setups, the undercut and rally. So here's a low here, and also the white coffee and retest sort of thing. So you had a low here, and you actually saw on Wednesday, I believe, we put this on as it was coming up. But that was an undercut and rally. You could have bought it as it came up through 2064 early in the day. And that would have worked out pretty well, actually. So I noticed how the market moves around, but Snap seems to be holding in okay. So I'm taking back a little bit of my position here. I sold into the move above 23. I bought down under 20, and I'll show you why. You have the undercut of the low. Now you notice you're getting a little supporting action because the volume picks up. That would have been 6 days ago. So that is here on this day. And you can see that volume picks up a little bit there. And then you run up, you come above this low here, and you try to hold up, but you're sputtering a bit, but the volume is drying up. So what do we have here? You have a low followed by a little retest, a little pullback in here, and that is a Wyckofian retest here on light volume. So that, to me, when this thing turns back to the upside, I'll test it on the long side, use the low of the day as your stop. And then, of course, I actually sold this. After hours, it moved up to like 2060 something, and so decided to sell that and check it out the next morning. The next morning, it pretty much opened the same place, roughly, and even though it was like maybe a dime or so above where I sold it, I just come in and buy it and jump all over it at that point. And we got a nice move. So in 3 days, I sucked about 15% out of it. So you're coming up to these three highs, so that looks like resistance to me. So I'll sell it and see if this thing doesn't settle in. You can see that that's pretty clear. It's almost too perfect because it does run into resistance up here, and that makes sense. And you got a bunch of idiots who bought it. Look at all this volume up here. So they're all in here, okay? And some of them that bought it here and then saw it go lower, now they've got a little profit. So you're obviously going to get some overhead, okay? So you know that. So you watch on the 620. It's tightening up, though. The volume level right now is running, what's it running at right now, Dr. K? What's our volume level on that?
Snap is
minus 59.5.
minus 61.
Pardon me?
Minus 61.
Yeah, so it's drying up and on the pullback. So that looks very orderly to me. So on the pullback, I'm watching the 620 chart here. Let's see if I can find it. I know it's hidden in here somewhere. Here we go. And I'm watching this, and basically what I'm doing here is I sold into the move above 23 yesterday. So I'm coming in today, and I want to buy a pullback. So what I see here is pre-open action. In the pre-open, we set a low here at, I think it's 2260, I believe, 2261 or something like that. And you undercut it early in the day. So that was one potential re-entry point at 2260. Then I watch it come up. It runs into the 20-period line. And now you're backing down, backing down. But what do you notice here? The volume's drying up. So this whole process in here is a Wyckofian retest on the 5-minute 620. So as it comes down in here, now it's starting to turn down. I'm going to buy some back. I notice it's holding tight. The 6-period line looks like it might turn above the 20-period line, which is here. And if that happens, then I'll probably be upping my position. And I notice that Snap doesn't seem to really care what the market's doing. It just is in a position where it can squeeze a lot of shorts, I believe, and just go higher. So, you know, this could turn out to be a big winner. Everybody has dissed this thing. And as my kids like to tell me, throwing shade on the stock, you know, it's overvalued, let's short it, it's going to 17. Yeah, sure. You know, the whole world hates it. So at that point, I'm more interested. Everybody loves it up here. Everybody hates it down here. You get an undercut and rally, you got to be buying it. Now, I would be, if you didn't buy on the day that we put out the pocket pivot report, which was pretty timely, I think, and also if you didn't buy it on the undercut and rally, which is a setup I discussed at length in this past weekend's mini conference as a buy setup, and we even talked about the setup potentially working out in Snap. Okay, so hopefully any of you who are at the workshop and aren't that familiar with undercut and rally, or what is also known as a Wyckoff spring buy setup, and it's also derived from Livermore's shakeout rule as well. You could have been on it before we put out the pocket pivot report, and I hope some of you were, and I'm sure some of you were. So anyways, looks like 620 trying to cross. That's what I said, Scotty. Scotty, are you still nursing a hangover from Saturday night? I actually bought Scotty a martini on Saturday. Maybe he quaffed a couple more after that. In any case, yes, he says. Okay, all right, he is. But you had a good time, right? So it's definitely worth it. Pocket pivot, double bottom on DXCM. Anyways, we'll get to the questions as soon as we are through our list. So let's move on. So that's a name I like, you know, and I think it has big stock potential. So Chamois. Does anybody know how you pronounce this? Do you, Dr. K?
Chamois.
Chamois? Isn't it French?
My French is very rusty.
It's like Lululemon. It's like Lululemon. Okay. Anyways, let's see. I'm actually short a couple of names here. Just real quick, I'm going to punch them out to you. Grub is one. This isn't a bear flag. You had a nice reversal 4 days ago. If you saw that, you could have shorted it. But it's essentially a big pod formation on the weekly chart, and it failed up in here. So you can see this was here's the pod. Big. and it's a big slow pod, but it comes up relatively fast in this area, so that's subject to failure. Now, I actually played this on the long side on the way up, okay, and I think we even put it out as a pocket pivot probably late. But in any case, this is your failure point here, and you come around, you try to form another base, and you fail again, so you have two failures in here, and this became shortable in here. Now your resistance is underneath this basing area, so let me see if you can, so this would be your area of overhead congestion. You can see that it gets resistance there, so the selling volume is picking up, and I think these guys are pretty much toast. There's a lot of other companies coming into the space, and I think I pointed this out maybe last week or the week before when I was talking about this, is that I'm noticing that at least 3 restaurants in my neighborhood that are just within a few blocks of my house that I go to all the time. There's our local deli, the Delray Deli, there's Chicago for Ribs, and then there's also, what's the third one? Mike's, Jersey Mike's Submarine Sandwiches, which I think are awesome. They have their own apps. Okay, you can use Grubhub, I think, on Chicago for Ribs as well, but these companies or these restaurants have their own apps, and I think they might like to control that. But there's also a whole plethora of competitors, including Amazon Delivery, I think it's called, is coming into the space. Someone pointed that out to me yesterday. So I think this thing's done. Okay, on the weekly it looks like crap, so it's really a matter of finding a nice entry point. So from here, now I'm working this every day pretty much. So it rallies into the 10-day, I short it. Yesterday I did the same. I did that and it came down. I covered actually, and then I come back in. They give me another shot. So I'm working this. To me, this looks like a shake in or shake up, whatever you want to call it. So it's the reverse of a shakeout on the long side, where the stock shakes to the upside and then goes back the other way. A lot of times when you see a shakeout to the downside, a stock will break out. So in this case, I would be looking for a breakout to the downside. So I really like this new pen that I got, Dr. K. You're going to have to try this. The Epic pen. Anyways, right. Someone says Amazon's also coming in. That's Amazon Delivery. Somebody said that the workshop or the mini conference was definitely worth it. Well, we tried to make it worth it. So in any case, that's one grub I'm short, and I just work it every day. I'll cover and come back and get. I'm hopefully going to get a nice break at some point. Anyways, this is Alaska Airlines. I'm bearish on the airlines and have been since we saw, Delta Airlines broke down. That was a short, and United Airlines, and that was a short. You can see all these broke down a while ago, and Alaska is hanging up here. And that's a similar breakdown, but it's right up into the 50-day, confluence of the 50-day and the 20-day exponential and the 10-day. It's all right there. So it's in a shortable position. You use the 50-day at 95.38 as a selling guide, or not a selling guide, but rather a guide for an upside stop. And that's what I'm working right now. So now I'm actually up on that a little bit. And I also have a little UVXY. If I go long some things, like I'm long Snap right now, I'll sometimes if I'm worried about the market, or I think, not worried, that's an emotion, but thinking maybe we might get a pullback of some sort in the indexes, I'll hedge myself by owning a little tiny bit of the UVXY. And you don't need to own a lot for it to serve as a reasonable hedge. So the other option is just to take a two-sided view of the market and be long some things and short some things, and that's exactly what I'm doing right now. Some more names on the focus list. So CC, let's get back here. This one, notice this low here is 32.44. Notice it hit a low of 32.31 here. So it undercut that low and turned around. There's another undercut and rally. So this is another way of determining when an undercut move can be viable, or an undercut and rally move, if it's associated with similar action in the indexes in the midst of what is considered maybe a little bit of a scary sell-off. Sometimes it doesn't have to be that scary, but that's the context where you'll see these things work the best, and they're almost always good for a trade at the very least. And we can see that that's been the case with several of these. You can look at Facebook, another outside reversal day on Tuesday that looks pretty ugly, big volume. But notice how it finds support at the 20-day exponential moving average. I think I already talked about JD, same thing. He undercut a low. This is an undercut of the low, and it turns. So, and this is happening in conjunction with the indexes doing the exact same thing. So that's something to keep in mind. So here's this MKSI. This one, we put this on as a pocket pivot off the 50-day, but the reality is that's where you had to buy it. Now it's bounced up here, but I look at this thing, and number one, this is what you have. So Dr. K, we were arguing over this last night, I think, but it's had a big move on the weekly chart, okay? And you have this breakout, and this is why I'm wary of us putting any new names out there, although Snap was a good one. And you basically have a breakout that's failed. This breakout failed on volume that wasn't that heavy, but it was a pickup in volume. And now you broke down, you're rallying back up to the breakout point. So I definitely would not be buying this anywhere near this area, because this could fail and this could be a short, although it doesn't trade enough volume. So, I'm not so sure about this, and I would be wary of buying anything that is extended from an area of support. So maybe the 20-day moving average here becomes a spot to buy it, assuming it works. But the couple things just cautionary is that, in my view, and Dr. K, if you have anything to add on this, on the other side, let me know. But you've had a big move, and it could be vulnerable to a late-stage base failure, and any one of these could as well. I mean, Netflix as well could also. You can also see here what you have is a similar situation in that you have had a base breakout. Thing looked great on Tuesday, and then it reversed on heavy volume. So now you're bouncing off the 50-day moving average. Doesn't this look a little bit like this MKSI? You're holding in here in a little flag. Now, is this a bear flag, or is this going to set up as a Louis formation where it forms the L and then turns into a U? So I don't know. We'll see. I think a lot of that depends on what the market does. So we'll see. But right now, I'm almost inclined to think this is a short, and it's going to crack the 50-day moving average. So, it's a little of this, a little of that, but the action on some of these charts after the initial reaction bounce here looks like it could be negative. So I think you have to be alert and open to it either way. And don't get caught in a rut, bearish or bullish. We've talked about this many times before. So Momo, go ahead.
That reporter, I must have drilled it several times, remain fluid, remain flexible, etc., because, we're at a tipping point of sorts that the market could go either way depending on this piece of legislation, and so, watch your stocks. She forgot to mention that in the report. I mentioned watch your stocks several times because that really is the end point of what everybody needs to do if they're trading stocks, and not get not let the noise, all the noise out of the news and whatnot, derail them from their focus point, which should be the focus list or their own focus list.
Precisely. So now I see the Dow's suddenly up. So again, you're going to deal with some volatility today, and the only way you can navigate this is by just watching the actual stocks. So anything could happen from here, and I'm ready for anything to happen. So Momo is extended, so you're not going to come in and buy this anywhere here. NetEase is kind of interesting because this was a here you undercut the lows here in this area, in this little, say, you could call it a bear flag, but who knows? Maybe it's a Louis formation in the making. The L is going to turn into a U, and it's going to go higher. That's a possibility. But for now, you have the undercut below the lows. You push up. The volume's kind of weak today, and this could roll over. And you have to consider also that let's go to the weekly chart. It's had a big move. It's had a big price move already. So who knows? We shall see. So I think a lot of these patterns could be on the fence, and I'd be watching for failure patterns. Your best short sale watch list is going to become your previously or your long watch list as things flip over. And you can see some of that's happening. You see names like Netflix, NetEase, Weibo is another one that broke down. So anyways, QTNA. Now here's the danger of small stocks. They're all over the place. So you got to sell into the move. You get the breakout. And idiots buy breakouts, right? So here's a nice trend line breakout here, and it fails. Boom, that's it. So I don't know. This thing looks cooked. I don't know. I'm not into buying it, but I wouldn't buy it anyways. It's just too small for me. Square. How about you, Square? Where are you? There you are. You can see it undercut this low here and rally, but notice how it's running into resistance at the 10-day line. Like I said earlier, this could set up a pocket pivot because you don't have any heavy volume down here, so it wouldn't take much in terms of volume to generate a pocket pivot, so you might want to watch for that. But I'm not sure I'd be entering here. I was buying this thing on the undercut as it turned, and then I sell into the 10-day, the move into the 10-day, and I take my profit. So that's how I operate. Some of you may buy it there and then think you're going to position trade it and use that as your stop. That works too if you're not manic like me. Now here's Tesla getting back above the 50-day moving average after looking like it's going to bust the whole thing again. Here's the ugly duckling. Boom. Right there, and then you get back above the moving average. Now, there's another type of another type of undercut and rally move. The first one that we talk about in the Wyckoff Spring occurs when you undercut a prior low in the pattern. There's also one I've noticed that seems to work a fair bit in this market, and that's the undercut of a moving average, which, if you think about it, the undercut of a prior low fakes everybody out because that prior low is seen as support. And when the support is broken, of course, everybody thinks that's the end of the world for the stock. And it draws in shorts, shakes out the last sellers, and then turns and rallies. And these days also with moving averages, you'll see a lot of stocks drop below the moving average and they'll look ugly at the time. And then they'll turn around and go back up. So the undercut of the moving average now becomes a different type of undercut and rally setup. So, and the way you play it is the same way you play the undercut and rally of a prior low. The price at which the moving average is at becomes your entry point, and then that also becomes your selling guide. So it works, and it's very tight. You don't need to have plus some silly percentage of whatever the price is, like the shakeout-plus-three and 10 and 8, and that's all a bunch of baloney and very imprecise and kind of stupid if you ask me, but at least based on the research that I've done, which tells me that all I need to do is see that thing when it comes back above that prior low, I buy it, and I use that low as my stop. So even with the snap, getting back to that real quickly, when it moves back above 2064, I can use that as my selling guide. Yeah, maybe I can give it another 20, 30, 40 cents on the downside if I want to. But that still keeps risk very light. And let's say it does drop below that 2064 low and then spins around and then comes back up. Well, I might end up buying and selling and then buying it back a couple of times before it works, and then I catch a nice move. So you kind of got to work it. But in my view, it's a lot better than waiting for a so-called shakeout-plus-three, because let's face it, if you were using a shakeout-plus-three here, this is your low at 2064. Well, +3 is going to be 2364. You haven't even reached a buy point yet, and you've already missed this move. So to me, it's a silly rule. It's another one of those O'Neill rules that are poorly tested from a statistical standpoint and don't really hold up in the real world. They're also very imprecise, and there's too much risk associated with them. So using it the way I use, or using the undercut and rally the way I do, with respect to either a prior low or a moving average line, is much more precise, and then I know exactly where I'm in and where I'm out. I don't have to think, well, is this stock, do you use a shakeout-plus-4, do you use a shakeout-plus-3, or and who's done all the testing on all these different numbers? To me, it's just a bunch of garbage.
As head of fundamental research, what I noticed, the biggest flaw with and as much as I love the research, dedicated research that O'Neill has done himself over the years prior to my joining the firm, but the biggest problem was that this shakeout-plus-3 and a number of other rules that he created, I believe, worked at the time. They worked for that market cycle, or maybe multiple market cycles, but then markets change, as we all know, and they no longer applied. This shakeout-plus-3 is something I never was able to make any statistical sense of. It's better to use a percentage, not a hard number. A hard numbers never made sense to me. It's just, I think it just conveniently happened to work back in the day because a lot of stocks tended to be priced also typically between $20 to $50. I mean, we didn't have, stocks trading in hundreds of dollars back then, and we also, it was kind of agreed upon that anything under, $15 was kind of junky, and there was a relative consistency to that. So you could use that +3 without having to, use a percentage. But of course, in the 90s, stocks started to price out quite differently, and you had some, early teen stocks that did extraordinarily well, and then you also had stocks that were trading, well above 100. So, I noticed that in his code, because I worked with Rajneesh, the programmer, a lot of the coding, say for Wanda, for IPOs, for instance, the way they programmed our relative strength calculation for IPOs is way out of whack with reality. So, I had Rajneesh reprogram all that stuff based on the current studies that I had done. And again, it's just because I found that something worked back in the years when I was at the firm doesn't mean that it would work today. In fact, I would say, I've obviously noticed that a lot of tried and true indicators stopped working when QE came into the mix in 2009. So the key there was to be able to be nimble and recognize that and adjust accordingly, which is why I think, when I tell people, I don't think I've missed a market day in over 20 years, something to that extreme. And you could probably say the same thing, Gil. We love it. We're not wedded to stocks, but we are kind of wedded to the markets. And, it's a lot of fun for us. So why would I want to miss a day?
Yeah, exactly. Anyways, last two names on the list would be the Trade Desk. Now this one, has had a big move, so you could have sold into that. And people always ask me, well, how do you know when to sell something that's moving really fast? And I think that the best thing to watch is a 10-day moving average. So if it's a big streak like this, as soon as it breaks a 10-day, you can sell it and then see if it sets up. So now this thing's correcting, and because it's a smaller, thinner name, it's correcting a lot and heading for the 50-day line and the 10-week line. So this is a very volatile stock. You have to buy it on weakness. So maybe it sets up and forms a new base and sets up down along the lows near the 10-week moving average, 50-day moving average. And last but not least, Viva Systems has been rocketing as of late, and it had one pullback on Wednesday to the 10-day line. You could have bought it there, and you get a nice scalp out of it, 7-8% I think from there. And now it's back at the high, so it looks like a little double top. This thing probably needs to base, so the only way I'd be buying it would be on pullbacks that test this low. So you could have a situation, let's say the market's really weak, you could have a situation where it comes in, undercuts, meets up with the 20-day, so that's something to watch out for, possibly. Not sure I'd be jumping all over it here. So, and then I did talk about Tesla. That is a moving average undercut and rally move. So, and you're getting a nice trade out of that today, up 6.70. So that's not too shabby. Let's see. Where are we? Let's answer some questions here. COO, Cooper Companies. What about it? Do you see? You think we're dumb enough to buy a breakout? No. So this is a Louis formation, though. So if you bought it along the 20-day or the 50-day line, that would have been the spot to buy it. But I'm not going to buy a breakout. So, and it might go higher, but I'm not going to tell anybody they need to buy this here. The place to buy it was at the line, at the moving average. So, NVRO. Now this, okay, now this is maybe a Louis formation. I don't know. This thing's had a pretty decent move. I kind of like this. Is a decent cup with handle. It's tightening up a little bit on the weekly range. So this might be one to watch along here. It's kind of a thin stock, so not really the thing that I really like to play. But it's not too shabby. Maybe it does turn around. So if you wanted to test it here, you'd use the 50-day moving average as your selling guide. Doesn't mean it's going to turn and go higher. So, I want to remind people, because I know we've had a lot of new subscribers showing up over the last month, and a lot of times that's also coincides with a possible market top, because everybody gets excited about the market. You see this rush of new subscribers coming in, and I know there are a few that are new to the webinar. So the one thing about us is that we want to teach, or at least I do, and I think Dr. K feels the same way, we want to teach people how to handle things and not be running stocks by us, trying to get our seal of approval or asking us to bless their trades. There are setups, there are ways to buy stocks in this market. We talk about those, and they can be applied to any number of situations, and that's what we want people to learn how to do, how to take some of the ideas and concepts that we use, like the undercut and rally, and using voodoo pullbacks after pocket pivots to buy rather than chasing the pocket pivot, and stuff like that, and understanding how to do that yourself. I think that's the best way to become a good trader. But you could be on track here with this one. It has undercut prior lows.
And
Maybe it goes higher.
On that, I think a lot of people have been conditioned over the years to buy breakouts, which have amply proven to have a risk that's too great in this kind of environment. The markets are not forgiving like they were in the 90s. So just to mention of COO, seeing the breakout on that's the wrong kind of thinking for this environment. And the idea essentially is to position yourself when you buy a stock. If you're going to buy COO, then if you brought it up because you had bought it when it was right near those moving averages, then bravo. That's exactly applying our principles, because if you bought it at that level and the trade didn't work out, what's your risk? minimal. I mean, you know, when you these days when you're buying a if you're going to buy a pocket pivot, if it's one of those upside reversal pocket pivots, in other words, it's up through, it comes up through a moving average, so you know your risk in buying at that level is maybe 3 or 4%. Go ahead and buy it because the formation's good. But pocket pivots, which are sticking straight up, you know, what's your risk on that kind of pocket pivot? It's going to probably be 6 to 8%. And you want to avoid those kinds of trades. You want to keep your risk to, you know, typically less than 3 to 4%. And volume dry-ups, as well as Wyckofffian undercutting rally formations, are excellent types of formations to abide by that.
Yeah, and I think so. This one is out of position. Maybe this one resolves the same way. It could also top. So you know, but I like the weekly pattern looks okay. So in that, within that context, this could be a lower risk entry point using any of these moving averages as a pretty tight selling guide. So, and that's the kind of setup I would prefer to be looking at as opposed to something like this. Someone's asking about Dexcom. Yeah, there's a good example of one. So you had as an undercut. So I hope you bought that on that one, on the undercut. So you can see it undercut the lows on Wednesday, and it turned around. Now it's popping out. And now you won't want to chase that, but that looks pretty good in terms of being aware of the undercut rally at the time. So not too bad. But that's a good example of one that's worked out. And you know, you come into it down here, you're getting a much better pop than chasing it here, because you could just get whipped back to the downside. And you can see that every time this thing has shown strength, here and here and here, it's just come right back in each time. So here's another show of strength. Does it clear and keep going, or does it do the same thing? I would rather be in a position of buying it down here and seeing from there, you know, from that vantage point. Anyways, let's get on with some more questions. Shop has been, actually this one's been acting pretty well for a while. So are you just bragging, Scotty? So seems like a funky Louis. This is kind of a Louis pattern, but again, it's not really a Louis pattern, okay? Because you're missing the whole point of a Louis pattern. A Louis pattern occurs after a stock has shown like a strong breakout, and then it'll turn around. It's frequently a re-breakout pattern. So all this is a pullback into the 20-day line after showing some strength and moving higher. A Louis pattern is more like, let's use an extreme example. Here's a Louis pattern where it breaks out, and this is Lumentum Holdings. And you can see here, let me make this, let's see if I can. You break out, and you're looking really strong here, and it looks like you're going to blow apart, and then it sets up and turns around and goes back up to the upside. So that's more of what I would consider a Louis pattern. It looks like it's failing, and then it doesn't. There's probably some other examples I'm trying to think off the top of my head. But that's what a Louis is. So that's the essence of a Louis. You know, it's just a big fake out, re-breakout. So, and that's what'll set up. So, you know, like the COO, that's a typical Louis, because you're trying to move higher and then you bust hard, and you're trying to come out of there. So, you know, so you've got this really ugly breakdown, and it looks like it's going to bust. So it's generally, and this one's not really a breakout and a fake out, but it's more like where you've got this huge selling volume and the thing is coming out of your shop. It's just kind of, that's an orderly pullback, you know, so it doesn't really get you thinking it's looking ugly. It looks actually orderly. Does that make sense, Scotty? It's more of a an ugly duckling sort of situation. That's probably a more accurate way to describe it. Let's see.
I also wanted to point out that SHOP and WIX, W-I-X, on a fundamental basis, they're extremely strong. These represent the do-it-yourself type of companies where people are migrating onto the internet to generate another income stream in addition to perhaps their regular jobs. So as we all know, you know, that's a big, the floodgates have opened, and you've got a lot of people populating the internet with, you know, whatever they're trying to sell. Maybe it's a service or a product, and that's really taken off. So these companies are benefiting.
So, the person asking about Cooper is on my watch list with a possible buy and a pullback. I think you missed your chance, though. It already pulled back. So anyways, let's see. More questions? Do we have anything? What should we cover now? some of these, there are a number of stocks that look like shorts and don't really play out. Like NVIDIA, look at NVIDIA here. It's coming out, and you can see that you've got this now, it's weird kind of double bottom, but you did undercut the prior lows and now you're rallying. Okay, and you had a pocket pivot on right here, 1, 2, 3, or 6 days ago. So right here off the 20-day moving average, and now it's holding tight with volume drawing up along the 50-day moving average. So who knows, maybe this thing's going to turn around, but it's sort of it could become a short if you see a breach of the 50-day line on the downside. So if you see volume spike and it rolls through the 50-day line, then that could be a problem. So anyway, now the Dow's up 19. We've seen the market going all over the place. It doesn't really seem to know what the hell it wants to do. It was down 20 real quick. I think now it's back up 20. I like the snap though. That looks good. Watching the UVX. So I do own a little bit of that, and that's kind of a barometer. I noticed. So now now we're coming in, so it's starting to rally. Snap is coming up. Grub bouncing a little bit. And that's another one we have on our short sale watch list. Berry Plastics has worked pretty well. Remember last week I told you guys it's probably shortable along the 50-day and the 20-day and the 10-day. The confluence of the moving averages has broke to new highs. Now it's kind of out of position. We also, Tesla again is also on both lists, which may sound contradictory, but it's still in progress one way or the other. And I don't really see this move necessarily as being more than, say, a swing trade opportunity, but we'll see how that plays out. But, you've got this fractal head and shoulders. That could still play out if we see volume pick up on the downside. What else do we have on there? Oh, Cat. Yeah, that's actually been pretty good this week. One of my favorites. Cat, rallies up into the 50-day line are shortable. Here you're sitting at the 10-day line. You could break to the downside. So I guess if you wanted to, you could test a short here, use the high of the day as a stop, or use the 20-day exponential at 93.72. So X is also, is that on our, yeah, that's another one. Again, this one you got a short on the rallies, and it looks like it's breaking lower. I'd also throw in Steel Dynamics into that pile because it looks very similar. And so when you're near the 10-day line, this is similar to what I'm doing with Grub. If you short near the 10-day line because that's the nearest moving average on the upside, then that becomes your stop. You could give it a little more room, for example, like up to the 35.57 level where the 50-day moving average is. But keep all these guys on your radar because they tend to move together now, and they're all just kind of breaking apart, which is very interesting, I think. Anyways, do you have any more questions? Watching to add to ALKS as a buy or a short? Oh, as yeah, I guess so. This one's pretty volatile. So it's a crazy biotech. I think you buy it on extreme weakness. So I don't know. This one, I don't really trust this stock. It tends to be volatile, but it looks like it's trying to set up. So if you can sit through that, it looks okay. But there goes Snap, 22.88 now. So that's moving up and out. Let me see what it looks like on the 620 chart. You can see, yeah, you're getting a buy signal here as well. It's, whoa. Somebody comes in and tags. You see that? The way that now it's pushing back up. It tends to be pretty volatile. So if you're going to play it, expect a nice, crazy ride on this thing, short term on an intraday basis, all over the place. So my 620 comes in very handy here. But remember I was talking about that you had the white coffee and retest on the 5-minute chart. I talked about this because volume's drying up. You set a low here and then a pre-open low here, and you tested the low here. Volume was light, and you came up and out. Now you're sitting here and you're turning higher. So I'm coming back into the stock in here on the white coffee and retest. And the low of the day would probably be where I'd bail out and then see if it hangs in. But I can be in and out of this 3 times a day depending on what it's doing. So that's just how I play. But those of you who bought lower, on the pocket pivot, you can hang and let's see how the position plays out. For all you know, this thing's going to 30 or above depending on what the market does. Any more questions? What else do we have? I think that's all we have on the short list. We just have a few, and it's not like they're really you know, CAT and U.S. Steel are working out pretty well, and I think by default you can also throw in Steel Dynamics and other steel stocks that might be shortable or stuff stocks. You know, the other ones also, the infrastructure stocks, these look ugly, but these could be subject to rallies up into the 50-day, like Martin Marietta, on some news that they're going to do, you know, build 2 more walls or build a wall on the Canadian border, which I'd like to see too. I'm really tired of all those Canadians sneaking into our country all the time. Let's see. Point and figure chart on Snap suggests 30. That's right. I was actually doing the price target thing on the point and figure chart of Snap, and that's pretty much what it does show you. So nice going there, Scotty. I'm glad to see you're using point and figures. If you don't know anything about point and figure charts, it's just another tool, and you can use it to figure price targets on stocks to give you some idea, you know, of where they could be headed. So it's just one reference, you know, nothing. And now we're going back to the downside. The Dow's off 475. So now we turn to the downside on this. Looking at Snap still hanging in there. I think it looks okay. I like this. I'd like to see the 10-day line catch up to the name at this point. So I'll look at some other names on my short sale watch list, which isn't huge, but Intel was one. You know, that looks like a short. It's a little bit of a head. I don't know. You call it a failed base failure here, so you're stuck underneath the 20-day and the 200-day. So that could be a short. It's not going to be a huge, you know, juicer on the downside, I think, but you never know. You could get 10-15% on a breakdown to 33.50 to this prior low back here from December or November, whenever that was. The airlines, of course, you know, I've talked about that. Alaska Airlines, which I'm actually short a little bit right here. I'm up on it just a pinch, nothing really spectacular. Somebody was shorting CSX a couple weeks ago, just underneath the 10-day, 20-day lines there, and that's working out. So now it's below the 50-day line. You can see that here. So you had a base breakout attempt. It failed, and volume was decent there for CSX because it's a big cap railroad name. And then you hang along in a bear flag, and instead of turning into a Louis, see now this, Scotty, this would be a more classic type of Louis formation, where the breakout fails, it holds tight, and then turns around and breaks out. In this case, however, the breakout failed. It kept finding resistance along the 10-day and the 20-day exponential. Now it's broken lower. Now it's below the 50-day line here, and it looks to me like it's probably a short here using the 50-day line as a guide for an upside stop. So that isn't looking so hot. Let's see. You got to keep an eye also. I think CRM might be setting up as a, I think I talked about this, a possible pod on the weekly chart. You can see there's your pod. It's a big thing here. And again, this is this idea of a very rapid run up the right side that just becomes unsustainable on the basis of it not really spending any time to consolidate its prior gains, so you don't have a chance to work out weak hands. So what happens on the daily chart now, your first sign of failure is a break of the 20-day exponential line. Now notice it also undercut this low in here on Wednesday, and that led to a little rally, but it's not going anywhere. It's hanging along the 20-day exponential line. So let's take a look at this. This might be a real-time trade for me. Let me check this real quick. Let's see. First we clean this up. We go there. Let's take a look at the 620 chart on Salesforce. So you can see maybe we're starting to get a little rollover here. That's a possibility. So I got to think, you know, let's see. We'll do the set it up at 81.94 on the bid. Let's see if you don't get a little push up to 82.10 here. That would be optimal. Market's up 11 on the Dow. Snap holding up. My other shorts are coming in a little bit. Tesla's starting to back up a little bit. Netty's backing up a little bit. Let's bring this up. I'll take a look here. 96 now on the bid on CRM. So I might, since this has been a low that's held, I might look for it to push back up to the highs. So the other thing with shorting is you kind of figure, like, don't get too excited about shorting something. Let it sort of play into your hands here. So just kind of watch this. because you haven't really gotten a clean 620 sell yet, although you did get the MACD cross on the stretch earlier. So you can see the stretch here, a little bit of stretch, but you get a little bit of a stretch and cross. So now it's sort of hanging in there. See, it's going to tease me. It's going to hover around here, then it's going to break. So here's how to make sure that it actually rallies is I'll short a position right here. Small position for me, 2,500 shares at 81.93.5. So now we're hanging here. We'll see what happens. See, this will ensure that it will rally up in here, and then maybe I can put the rest out here. We'll see. I tried this a couple of weeks ago and got scalped a little bit. I think it was last week or the week before, but really no breakdown until this week. So we'll put that out and see what happens. Let's see. The weekly chart looks like it is setting up in a bullish triangle. What? What are you smoking there, Scotty? Or rather, what are you drinking? I know what you're drinking, so I don't know. I'm going to go on this basis here. Number one, it's a pod-like formation. So it's had several weeks of sustained upside. And notice how all of these weeks in here, from here to here, are all stalling. And the volume's reasonably higher. So now you're rolling over. And so on that basis, at the point of impact right here and right now, looking at this now, you've broken below the 20-day moving average 4 days ago in volume, but you also had this bigger volume reversal occur here, okay? And that was before the market got into trouble over the last few days, started to show weakness. So it was already getting weak beforehand. You break the 20-day line. How do you know when you're looking at a potential pod failure or punch bowl of death? You first will see a break of the 20-day moving average. And now this thing is actually closed below the 20-day moving average for the first time since it bottomed way down here at the beginning of 2017. So in my view, I don't know what a bullish triangle is, but this looks like a pod that's failing right here, right now. So, and I don't know about bullish triangles. I think that's all BS. Longer time frame. Screw the longer time frame. So it doesn't look bullish to me. I don't see the bullish triangle. Where's the bullish triangle? What are you talking about? Where is the bullish triangle? Is this the bullish triangle? This is this the triangle? I don't know. It's just like that's what a pod will look like, a big triangle. Well, I don't see the triangle, Scotty. Where is it? Starting in November 2015. What? Just so you know, I know Scott pretty well, so I can give him a bad time here. November 2015 would be... So you're saying then that this pattern, this whole structure from me, oh, this is a bullish triangle? Nah, that's what a pod will look like. You know, nah, I don't think a bullish triangle pattern on a weekly chart going back 2 or 3 years is really going to be as helpful as just looking at what it's doing on the daily chart right now. So, and right now that's what I see, and I have a clean stop at the 20-day exponential, which is now at what is that number there? Can't see it. 82.28, so that I can handle. Okay, so see, I put some out at 81.93, and it's now bid 95 cents. So see, that guarantees it's going to rally 20 cents from here. So we'll see. Maybe it'll break down, and I'll look really smart all of a sudden. But anyways, any other questions? It's 10 o'clock. I think I'm done. So you got a couple of shorting ideas here, and a couple long ideas, and you're ready for anything. As far as I'm concerned, we could see anything. And what everybody thinks is going to happen, they don't pass the healthcare legislation, the market tanks. Maybe it sells off, maybe that turns into a buying opportunity. And how do we take advantage of that? We maintain total awareness with no bias of all of our long watch list names and look for undercut and rally areas when things look grim. And then you can have a couple of short positions or some short sale targets. I would average 5 to 10 names that I'm keeping a close eye on that that could become actionable, and so doing that. See, now we're bid to 82 on CRM, so that's typical. Come on, take it up another 20 and I'll really lay into it. We'll see what happens. Anyways, so hopefully you guys are armed with a few ideas here, and I would assume you also have some of your own. So we hope this is helpful. There's Snap now bidding 22.90, moving higher, looking good. So that's it. Have a great weekend, you guys. We'll catch you next week unless Dr. K has something to add.
No, I think it's all been said. I mean, you got your stops in place as usual. So if the market sells off, they'll be hit. You'll be brought to cash, but then maintain clear awareness that you might have buying opportunities immediately after in the form of undercut and rallies, and then in the ensuing days, maybe in the form of volume dry-ups. And those are both two very low-risk patterns that we've identified. So, those have worked very well over the last few years. So, that will allow you to keep a clear head and not really be concerned about, which way this bill goes. Because it's psychologically reassuring to know that, okay, what's the worst that can happen? The market sells off huge, but my stops are going to be hit. I'm going to be in cash. I'm going to be safe. And that is psychologically very reassuring to myself anyway, and I think it would apply to probably everyone else.
Yeah, so that's all you need to do. Anyways, hopefully we showed you some things that are useful here today, and have a great weekend. We'll catch you next week, and take care.
So long, everyone.